Brian.
Good Friday afternoon, everybody. I'm Tommy O'Brien, coming to you live from TFNN, 2 p.m. Eastern Time. 2 hours left to go in the trading day. We're doing the program a little bit early today from 2 till 3, and then we're going to get out of here a little early, 1 hour early on Friday. Markets up by 29 points, testing the highs of early this morning. We've had a few negative days in the market. And let's take a look at the volume as we kick things off. You're looking at an S&P right now on this bounce yesterday. S&Ps, 1.6 million contracts. Today, 980,000, but it's Friday. You're going to get volume on the close for the week. It's not option expiration, but 2 hours left to go, and we've had some volatility today. As you see, in both directions. We get a little bit of sell-off this morning. You're trading higher, but you look at some of the numbers we came into, right? Look at this selling that we got this morning. Okay, this is a 5-minute chart. 10 a.m. Right after that, those two bars in that 10 minutes, folks, you did 70,000 contracts almost. On the way up, you did 15, and 13. That's only 45,000 contracts, even if you count. Just massive volume on selling from that 10 till about 10:30 period. And we've risen a little bit on lighter volume. So going to be interesting to follow these markets for the 2 hours that we have left to go in the trading day. And similar action with the NASDAQ 100. Excuse me. Up by 56 points, up by 0.2%. Dow up by 0.7%, challenging the highs as well. And the Russell up by a similar 0.7%. So we take a look at yields on the day where we get consumer spending. Strong number. I believe consumer spending up 0.4%. We'll jump over the numbers in a moment. PCE, inflation, basically in line with expectation, maybe a little bit hot. But we're talking about 2.9% headline, 2.7% core. That's the Fed's preferred inflation gauge. It's at 2.7%. The hard part was going to be going from 3 to 2. And already they're cutting. Make sure you're positioned if the new inflation number is 2.5 to 3%. Very reasonable. That might be the case. Maybe growth will warrant it, okay? Because that's where we are right now, and we are cutting. And let's talk about some of the numbers. As we get the 10-year right now, sitting at 4.19%. So consumer spending powers on as inflation persists, right? We have inflation, but consumers are like, that's okay. Here's your core PCE, month over month. They're strong numbers, okay? You annualize these numbers, right? Look at the last 4 months. Talking about 0.25%, 2. I mean, the last 3 months alone, the last 4 months alone, you're up 1 percentage point. The PCE, not annualized, okay? Not annualized. If you just add up the last 4 months, you're up by a full percentage point. Personal spending, 0.4%. Let's get the gauges. Here they are. PCE, month over month, 0.3%. Core, 0.2%. Oh, no, the core is up 2.9. I reversed them. So the headline number is 2.7% inflation. The core number, taking out food and energy, which the Fed prefers, 2.9%. Consumer spending, though, hot, 0.4% versus 0.2%. Those are hot numbers, folks. So you jump back to the market. Here we are at 8:30 on that number. The market gets that number. We say, okay, inflation. Now, they knew they were going to get that number. That's the remarkable part. The market is okay with the fact that the chairman of the Fed has told them, we know that inflation isn't there yet. It will get there over time, but we need to act now because they're seeing a slowdown. And these were the numbers that were expected when the chairman said that, right? So they're going to be cutting. They're still hot, though. And you have the market coming in saying, okay, the economy isn't as bad as we were thinking potentially. Consumer spending is doing well, and inflation's not too strong to slow the Fed, at least for right now. And what do you get? You get a 10-year that we're 2 ticks away from where we were. So in yields, we haven't moved that much at all. You jump over the 2-year for a reaction on that number. Barely a movement, right? We're talking about right where we were at 8:30. So that did not impact the Fed at all, okay? And if anything, taking a look at where the market is pricing, this number going up. Yesterday we're at 85% chance they're going to cut. The market actually thinking a 90% chance right now. Okay, so the odds the Fed cuts October 29th, 9-1. You go out to December, the odds they cut twice, 65%. The odds they cut once, 32%. 3% outlier that they have no cuts by then, whether that's a cut and a hike or just no cut. You go out to March, so they're talking about 4 meetings, 2 to 3 cuts. Right now we're at 4 to 4.25%. By March, 2 to 3 cuts, 10% chance of 4% cuts. And then let's get a little spicy when you go out to June. Okay, now don't try and go out 6 meetings, folks. By June, we have a new Fed chair. The data can just be so violent during that time. But where the market is pricing right now, it's calmed down a bit. In terms of now we're looking at a 35% chance by June, so 6 meetings out, that they have 3 cuts. That's a cut and a pause, cut and a pause, cut and a pause. That seems a lot more reasonable than the market getting ahead of itself. Now, 27% chance you get 4 cuts by then. We're going to have a new chairman or chairwoman by then. So there's going to a lot that's going to play out by then. But no real reaction. We are on course for some cuts, and it's pretty remarkable that the new numbers are going to be 2.5 to 3.5% inflation, I think. Because we're cutting right now when the core PCE is at 2.9%. We're cutting with core PCE at 2.9%. That creates the range itself. It's going to be an interesting week for the dollar next week, as in we've bounced nicely. We're off the lows. But what does happen is you came into the Fed and we had a little bit of a buy the rumor, sell the news type event in terms of yields rising since then. We hit 4% on Fed Day. We're now at 4.19%. But we are going to enter the phase again where it's going to be another buy the rumor, sell the news as we come into the October 29th. And that's where I think you're going to see continued pressure on rates lower. Okay? You're going to have rallies in yields even as we're cutting. And gold is doing so well. Right? Look at gold. You got the dollar almost 2 full points off the lows, trading at almost 98. And you got gold within almost single digits of all-time highs, within $20. Gold up $35 right now. We were just trading at 30. Look at this little action we got since we came on the air at 2 o'clock. All right, folks, S&P's up by 32. Gold up by $35. We're coming back.